Hi everybody, welcome to the Attract Capital webinars. I'm Janine, I'm with CEO David Barnett.
Hello everybody.
Today we're going to talk about the secrets to leveraging institutional capital to fund your deal. So Dave, it seems that a lot of people out there are trying to use other people's money to fund their deal. How do you feel about this?
I see that a lot these days, Janine. People are looking to get as much debt financing into their deal. And one of the things I hear is, well, I want to use other people's money. I want to use 100% financing, 100% financing. And it seems to be a bit of a frenzy, particularly for individuals or sponsors that are buying companies in a roll-up situation. And one of the things about when they ask for 100% financing is that I don't think people that are asking for it really appreciate how it sounds when they ask for it.
Yeah. How do you feel like the market is right now for 100% financing?
I think 100% financing only exists if you have an existing company and it's making good profits. If you want to buy another company and you need a loan for it, if you have enough equity value in your existing business, then you can get 100% financing. But if you have no money, if you have no investment of your own to put into the deal, it's very hard to get 100% financing because no lender is going to give that to you because you're not going to have any skin in the game. It amazes me how people don't see it as negatively as it is, because when you're asking for 100% financing, you really don't have any money to put in the deal, and it's a bit of an immediate turn-off to a lender.
That makes sense. So in the bid for 100% financing, what are people missing about the ask? Why is it coming off, in a way that's rubbing people the wrong way?
I think we've had a really hot market for a number of years now, and there's a lot of private debt and a lot of lenders that are looking to make deals. So I think people get caught up in the moment. And then I think we're kind of in the late stage of the whole credit cycle. So I think deals are getting done at more aggressive debt levels, so people kind of feel empowered. But I think what they don't appreciate is that when you go to a lender and you say, I don't have any equity to put in, give me all the money, the lender's going to tune out completely. And when you do that, you're not respecting the fact that the lender's going to look at you and say, you're nothing but a broker. You're essentially what's called a fundless sponsor. You want to buy a company, you want me to put 100% of the money in, but you want all the upside. And for most lenders, it's a complete non-starter. It doesn't work that way.
So I was going to say, what does that mean then for the lender and investor when someone's asking for 100% financing?
Well, what it means to them is that, as I just mentioned, you're a fundless sponsor with no skin in the game. So there's the issue of moral hazard where you might act somewhat irresponsibly because you don't have anything to lose. It shows them that you don't have a concept of how to build a sound capital structure for your deal, because every deal should have an equity layer in it. Doesn't have to be 20% equity or 30% equity, but it needs to have a significant equity layer in there. And it also telegraphs to them that you're unreasonable and you're going to be difficult to deal with. So why would they want to spend the time talking to you to try to put a deal together? I mean, 100% financing, it just doesn't work. And a lot of people don't even have an idea that when you say that early on in the process, I mean, one of the things about doing a deal is you always want to have your equity lined up first, so that you can say, I have these investors, and then you go to the lender and say, can you give us the loan? And when you come out of the box to the lender and you don't even stop at the equity side to try to get that equity, and you go to the lender and you say, I don't have equity, I don't want equity, I want 100% financing, it's just not a good signal at all.
Cutting it off before it even
Exactly.
happens.
It's immediately unattractive.
So then how would you help someone optimize the opportunity to use institutional funding in their deal?
Exactly. So I'm not anti getting 100% financing if you have an existing company with value in it and your cash flow support it. I'm all for that. I think that's great. What I'm for is, how do you get the largest amount of financing, not focusing on 100%, and there's ways to do that. So number one, don't say I want 100% financing out of the box. Just don't say it. It's a silly thing to do. Number two, you want to bring in some equity. You want to have, it doesn't have to be 25%, but it should be material. It should be meaningful to your personal net worth. Number three, you want to understand what the lender's comfortable stretching to, and then try to get them comfortable throughout your discussion and negotiation, and maybe they'll go further. So maybe they'll start at 85%, of the, so it's not 100%, it's 85%, but then maybe because they're so comfortable and you're willing to pay them a little more, they'll go to 90% or maybe 92%.
Yeah.
It may not be 100%, but if you start at 85, chances are you can get them to 90 or 92% if you know how to manage that process.
To give a little.
Exactly. You always have to give a little bit. You also want to respect the sequence. Get your equity first, then go to your lender, and then you can make the equity and the debt come in together. And then I'd say, ultimately, you want to make sure that you have a good deal. You want to make sure that your deal matches your expertise and your background and is presented in a very professional way. This goes for all deals, but if you want to leverage institutional capital to get your deal done, it's got to be very professional. And then the final point would be, you can also create pseudo equity, and pseudo equity would be if you can get the seller to hold a nice seller note or an earnout and not have to pay all the cash up front. So both by managing the process and the engagement with the lender differently and going about it a more intelligent way, you can maximize the amount of debt and leverage institutional capital to get your deal done.
Maximize. So you can get 100%, but it's about how you optimize the opportunity to maximize that.
Right. Unlikely you can get 100% if you don't have any money. If you have a company or money, perhaps, but what you can absolutely use the word earlier, optimize.
Optimize your funding. So there you have it, using institutional lending to fund your deals with our top tips from David Barnett as always. So thank you very much for tuning in, and we'll talk to you all soon.
Thank you.